Welcome everybody to the Leaders in Housing Counseling call for the National Housing Resource Center. We're very glad you're on the call. We're going to have a crowded call today. Over 100 people have registered already and have joined the call already, and it looks like many more are pouring in. We're going to get started because we have a pretty crowded agenda and really want to cover a lot of ground. We haven't been on for a month. This is unusual for us. Usually it's every 2 weeks. And there's a lot to catch up on. So we're going to do a quick rundown on federal funding for housing counseling, and then we'll have Kristen Messerly from the who's a specialist on millennials and the housing market and the mortgage market. She's been doing a lot of very interesting research and analysis on what people are seeing in the field and how the millennials interact with the mortgage market and with housing issues in general. Very interesting. That'll come on shortly. And then we're going to extend the call. Normally it's just an hour, but because we have a lot to catch up on, we'll talk about some emerging issues. Hopefully everybody knows the Federal Housing Counseling Advisory Committee is taking nominations. We've got some good names out there, but we've got some big gaps. Would like your help on that. We have the latest on FHFA and what they're doing on integrating housing counseling into the mechanisms for home purchase. We're in a little bit of a controversial place there right now, so I want to fill you in on that, as well as the latest on their work on HCO and improving it, which again, also some you all in the field have been very helpful in communicating the problems, and now we have to work on more on the solutions. So we'll talk about that. We're thinking about maybe nudging HUD about maybe removing the ban that limits your ability to charge complicated cases that take more than the regular time to both NFMC and HUD contracts. This seems like an opportunity right now to rethink that, and would like to get your feedback on that. Wanted to make sure everybody had heard that the personnel activity reports that many people really don't like, the requirement has been eliminated, but there's still requirements to provide the same kind of information. So we'll give you the wording that HUD has released on this and make sure that people are up to date. Some interesting things on bank settlements and funding, and some new ideas about how to manage this, and hopefully an opportunity for groups, but want to at least give you an update. And finally, that CFPB did a report on credit invisibles, people who don't have enough credit report to make a score, or maybe have no credit report at all. Turns out there's well over 20 million people in that category, but just to alert you about it. And of course, encourage people to join NHRC, and we'll talk about it at the end of the call. I'm delighted to see that we have many of our old friends who are on the call, but also my understanding is we have a number of people who are new to the Leaders in Housing Counseling calls. You're very welcome. And NHRC, the National Housing Resource Center, is an advocacy group for the housing counseling community. We're doing a ton of work on a range of issues, improving funding for housing counseling, getting housing counseling built into the settlements and funding streams there, doing a lot of work with the administration and the White House to elevate housing counseling, to create a much bigger public identity, to integrate housing counseling into the mechanisms like in home purchase and in loss mitigation, and trying to develop funding streams that will go along with that. And then we've had a very successful last year with our HUD task force working with HUD to improve reporting systems and compliance requirements, things that we have made some real progress on. HUD has been very open-minded about all this. We will continue that conversation going forward. In order to participate, step one is always to be part of the Leaders in Housing Counseling call. If you're not on the lists now, it's easy to sign up. Just go to our website, www.hsgcenter.org, and up in the upper right-hand corner, there's a link to getting onto our it's called the mailing list, but it's the Leaders in Housing Counseling list. And you'll get regular updates about activities we do and about these calls, but also informational pieces and sign-on letters. That was the vehicle. Many of you participated in the federal funding letter that we sent to Congress with over 500 groups signed on that originated on the leaders list. Lots of good work, and we appreciate the great work you're doing in the field, and our goal here is to try to amplify that and strengthen what happens so that your work is the most efficient and successful it's possibly able to be, and really helps shape policy in the United States. On that note, let's go and talk about federal funding. So Matthew, where are we at now?
All right, thanks, Bruce. So I sent an email out to the leaders list last week. So the Appropriations THUD or THUD subcommittee last week, very quickly they released their draft bill, and then the following day voted on it. That had the funding levels you see on the screen for HUD Housing Counseling and for NFMC. So for HUD Housing Counseling, their bill funds it at $47 million, which is level funding from FY 2015. And for NFMC, the funding would go from $50 million to $42 million, which we noted there is a $8 million decrease, or 20%. Although I think my math is actually a little bit off there, but 16% reduction. So I think the important thing the context here is that the overall THUD bill, the actual dollar amount is higher, but when you account for decreased FHA receipts and for increased Section 8 funding, the bill is actually about $1.5 billion below what it was last year. So we knew in the conversations we had with legislators, they basically had said to, with appropriators rather, they had said to us that at this point in this climate, being level funded is essentially a win, and we do kind of see keeping the funding level for HUD Housing Counseling at $47 million as not a big win, but it could easily have been a reduction. So it's not good news, but it's not bad news. On NFMC, again, it's disappointing that the funding is going to, the House would have the funding go from $50 million to $42 million, but that program, for years, appropriators have been making very clear to us that that program was meant to be temporary and is going to be wound down. So it's really no big surprise that they cut it by $8 million. It was what we expected, and it's somewhat good news that it's not a bigger cut. That's kind of the snapshot on the funding levels. Just by way of next steps, so at the subcommittee markup, they did not, the Chairman Mario Diaz-Balart strongly discouraged subcommittee members from offering amendments and encouraged that all amendments be offered at the full committee hearing. We're not sure on the timing of the full committee hearing. It could be as early as next week or perhaps the following week. So what we're going to do is, in the meantime, work with members of the full appropriations subcommittee, including Congressman Charlie Dent, who folks who have been on the call know has been a big champion. We actually just gave our Champion of Housing Counseling Award to last month, and see if we can get an amendment introduced. One idea is to try to maybe split the difference of that $8 million reduction for NFMC, try to get the HUD Housing Counseling number increased by that $4 million, so it kind of softens the blow of the lowering of NFMC. And then the other thing is the Senate is moving at a much slower pace, as they always do, and so we'll be working soon, start working on the Senate and trying to get higher levels on the Senate side. Bruce, did you want to add anything?
Well, I think that's a great summary. We have to fight this one inch by inch, and you've been doing some really good work on the Hill, and hopefully we'll have some field meetings coming forward. Do you want to just quickly give people an idea of what's happening there?
Yeah, so we've mentioned before on the call, but one of our big kind of legislative goals, and it's a longer term, over the course of the next year, even couple years, is building more support among Republicans and especially Republicans in the House, and in particular Republicans on the House Appropriations Committee and Financial Services Committees. And so what we're doing, Bruce just mentioned, we've done a series of 8 or 10 Hill visits where we're just introducing the staff to housing counseling. A lot of them, know a bit about it but don't know a lot about it, so it's just educational and talking a lot about what's happening actually in their district. We have 9902 data, HUD 9902 data for the district, so it's gives them a good idea of what's actually happening with their constituents. Then the follow-up to that is we're inviting the members to attend events in the district where they can meet with housing counseling staff and clients and see kind of firsthand what's happening and the benefits that their constituents are receiving. So we've lined up. I think we have 2 meetings scheduled. We're going to be meeting with Congressman Valadao in Fresno towards the end of June, and Congressman Luke Kmeyer in northeastern Missouri also at the end of June. And we're going to be lining more of those up. If anyone's on the call and happens to be in either the Fresno area or northeastern Missouri, definitely let me know, and we would love to have you participate. But and there'll be more of those coming throughout the summer, so we'll keep sharing details as we have them.
So excellent work. Thank you everybody for the good work in the field on this, and we are pleased that wherever we've reached out, groups have really jumped to the opportunity and really pulled together local meetings with clients, with success stories, and with recognition for the Congress members. This is, retail politics at its finest. This is how you build support, and it's going to be done one congressional district at a time, and especially important to reach out to the more rural and suburban areas where Republicans are to really have a high impact in the House and Senate. So good, good hard work we're going to be doing all throughout the year. We'll keep you informed on all of it, and some of you will get calls from Matthew saying, hey, you want to sponsor a meeting with a congressperson? And so far the response has been great, and keep an ear out for that. Okay, so I think we're ready to move on, and I'm delighted to say we have Kristen Messerly joining us from Cultural Outreach Solutions. Kristen is a widely recognized authority on reaching markets that haven't been served well, and has been doing a lot of work, especially around millennials, an area that has had a fair amount of discussion in the housing counseling community because they are potentially the next wave of homeowners that many of us will be working with, and there's been lots of conversations about how well prepared people are for homeownership, how prepared they are in terms of their finances, and whether they are burdened too much by debt. I've heard Kristen speak, and it's very insightful about this, and I think what we'll do is we'll have her do a presentation, hand over the slideshow to her, and then we'll have some room for question and answer, and then continue with our call on our issues afterwards. So with that note, welcome, Kristen.
Thank you. Can everyone hear me?
Yes, yes.
Okay, great. Well, thank you very much for inviting me to speak. This is a topic that I'm really passionate about and love talking about. I am a millennial homeowner myself, and I think that the industry has had a difficult time in really reaching and communicating with us. I definitely treat millennials as a separate culture. I think everyone would agree with that. But what I'm going to do is just go through some of the basic trends behind millennial homeownership and just the culture in general, and then close with some best practices in communication and reaching the millennial homebuyer. But I'd like to start by well, first introducing what is a millennial. This is someone that's born between the 80s and 2000s, someone between the ages of 18 and 34. And but I'd like to launch a poll, have a few of these throughout that, and asking you about how many of your customers are millennials, or how many clients you've had that have been falling into this age group. And Matthew, are you able to launch that, or?
Yeah, I think people should have it on their screens now, so we can just give it a minute.
Perfect.
It's kind of trickling in. I'll give it just another 15 or 20 seconds.
Okay. For some reason I can't see it, but that's okay. And at any point throughout, I would love for you guys to input your questions into the chat box, and I will address those as they come about.
So I don't know if are you not seeing the poll results?
I don't see those at all.
Okay, so I'll just share it with you. So
okay.
Fewer than 10% was 22%. 10 to 25% is 42%. 25 to 50 is 29%, and more than 50 is 7%.
Okay, so great. Perfect.
22, 42, 29, 7.
Okay, awesome. That's about what I expected, so that makes sense. Okay, so moving forward, I'm going to go into talking about some of the trends. Millennials are extremely diverse. They are the largest and most diverse generation in U.S. history. 42% identify as an ethnic or racial minority, and over 20% are Hispanic. So, and the interesting thing about this too is that millennials in general take on parts of different cultures. Like, we are I would define us as multicultural as a majority, because we have been so influenced by multicultural trends, and so as a majority, those are the ways that best describe us as a generation. So to go into some of the values and trends of millennials, we are digital natives. So we have grown up not quite having an iPad right out of the womb, but pretty close. We've had information access at our fingertips for many years, and that's the way we have adapted to the world. We know that when we go into any kind of meeting, we are going to be pulling a lot of information beforehand. Like when I went to buy my car recently, I knew I was going to know more information about the car than my salesman did. And that's because I have grown up with being able to Google anything and learn anything I would like to. When it comes to home ownership, that's very complicated because we know a lot of that education is outdated online. And so millennials are very social and connected. We have communication with people at all times. Very common for me to text, or I Skype my friends in Spain once a week, and it's just the world is a lot smaller because we are so connected, and the expectation is that we will have access to people and information at all times. We very much value innovation and creativity, and this is another area that I think the industry itself, in terms of homeownership, education, all of that, can really be improved upon. It's really appealing to that innovative and creativity within the millennial population. And this was just something that I had overheard a friend say one time that I thought this described the generation very well. He said, it's not that we don't like marketing or we don't appreciate someone reaching out to us, because we've grown up with predictive analytics where Target they know that this one girl really happened, that they knew she was pregnant before she did. So they were sending her coupons and then for a pregnancy test, and she was positive. So, but he said, sometimes you want to know what you don't know you want. And so we kind of have this expectation that the providers we work with will provide us with information before we know that we need it. And this is we're way far behind on that in terms of homeownership education and the industry as a whole. Millennials, falling in line with that creativity and aspects of millennials, they are very entrepreneurial. Over half of them would like to start a business or have already started a business. A lot of us have alternative sources of income, so we might drive for Uber on the side, or do graphic design, web design on the side, rent a room out on Airbnb. all of these things are very common, but it does complicate income documentation. Millennials value authenticity, so we are much less trusting, even though it seems like for a lot of us that millennials are very, very trusting because we talk to people we don't know online, but we're actually only 19% of millennials said people could be trusted in comparison with 31% of just the previous generation. So when we're talking about marketing and outreach and just overall communication with millennials, it needs to be very authentic. So I see a lot of people sometimes trying to appeal to the millennial demographic, and so they'll try to, or they'll say that they can't appeal to them because they don't know how to be like hip and cool or something, but that's really not what it's about. It's about, we value when someone is fully themselves, and that because that allows us to trust them, and that's basic for any population, any culture. But trust is a really big deal with really establishing rapport and proper communication with millennials. And I thought this was a fascinating statistic that 4 in 10 millennials have traveled abroad within the last 3 years. This is just really reflective of how much smaller the world is from the perspective of a millennial, because we have had access to travel and just this general idea of mobility, but that overall perspective really influences the way we see the world and how we view even major purchases. And then we very much value social justice. Any kind of company or person that we do business with, it doesn't necessarily push us over. It will help a lot if you are promoting some kind of social cause, or that's just something that appeals to the generation as a whole. And all of this kind of comes down to this quality of life value. And millennials, the American dream to millennials is different than it was for previous generations. It's not necessarily that we want to see this big house with a big family and a white picket fence. In fact, that actually deters people away from homeownership a lot of times. But overall, we care more about quality of life. So we are very much pursuing our careers and driving to the top of that. But we are also keeping in mind we want a high quality of life. So if that means taking a less pay but having a more flexible schedule, that's going to be something that's going to be of higher value to a millennial for the most part than previous generations valued that. So now I'm going to cover just a little bit about the differences between non-Hispanic millennials and Hispanic millennials. I think Hispanic millennials are a really interesting culture because they encompass both millennial and Hispanic traits from a standpoint of culture. And so they are very culturally connected. They have a strong sense of attachment to the Hispanic culture, traditional Hispanic culture, but they're also very tied to the same traits that I just talked about with millennials are going to be true with Hispanic millennials, obviously. And but I have a friend that said something that I thought was just very perfect, indicative of this generation and this particular segment. And she said, "Soy 100% Latina and I'm 100% American." So I'm 100% Latina and 100% American. So just kind of holding these two cultures in tandem is really an important way of viewing this culture specifically. Hispanic millennials are very family-oriented, so they're going to be more likely to be forming households a lot sooner than non-Hispanic millennials. They very much value education. We saw, according to Pew Research, that Hispanic millennials have higher college enrollment rates than non-Hispanic millennials. They have lower than average debt, so $10,000 less than non-Hispanic millennials on average. And they are very mobile dominant, so they over-index on mobile usage and kind of online usage on their smartphones. So before I go into purchasing trends and preferences, does anyone have any questions so far? I don't see anything, but
just one pretty general question that maybe we'll come back to at the end. I think we can leave it for now.
Okay, great. And I think now I'm going to wait on the next question. Actually, I'm going to pull it after purchasing trends. So, So to run through this is pretty basic, but just to give you background, millennials do want convenience and proximity. That's probably something you've seen a lot, but there's a trend towards moving closer to their jobs, closer to cultural centers, like everyday life activities. They want to be in line with the connection piece. They want to be more connected to each other and not have a long transportation time, or at least have access to public transportation. There's a big trend towards moving more urban. Over 60% of millennials said that they wanted to live in a city center, but of course most of them can't afford that, so it's closer to 15% that actually live in city centers. But that's risen by over 200% just in the last decade. So there's definitely a significant trend there. And then, of course, there's a tiny house movement, but that's really just indicative of how millennials don't value space the way that previous generations did. We tend to have a lot smaller homes and just not care as much, again, about that big house with a white picket fence. It's much more about efficiency and then some of the traits of the house itself. They're much more likely to care about eco-friendly homes and even smart homes, having the ability to put that kind of those kinds of things into the home. And then most of all, they care about investment. And that's a distinction from previous generations that I found. While everyone cares about having an investment in the home, millennials are much less likely to purchase a home because of emotional reasons. So that's not going to be their primary motivator. They are much more motivated by the investment piece and knowing that that's going to have a positive impact in terms of wealth generation. So to review some of the barriers to reaching millennials, I'm sure I would love to hear your comments on this and kind of better understand from your perspective what the barriers you've experienced in working with clients. But one of those is that millennials do utilize non-traditional income, which makes it difficult for income documentation. I think that's been a major problem when it comes to just the overall mortgage process, is how millennials some of them don't document their income appropriately, and sometimes it can just be very complicated. So a lot of providers, I'm sure you guys have to deal with this a lot, kind of providing education in that area and counseling them to be able to incorporate that in a more accurate way. And then millennials are very much in debt. We know student loans have risen incredibly by an incredible amount over this decade especially. 53% of millennials said that student loans prevented them from making a large purchase. And I know from personal experience how easy it is to get into student loan debt, making huge financial decisions at 18 years old, and it's very easy to do. And actually, it's not even documented. I used a student loan to go travel in Spain, and it was not even education really related. So I think that that's a significant problem and definitely can lead millennials into significant debt issues and then credit issues as well. And then one of the major barriers, from a lender's perspective mostly, or from a sales kind of perspective, is that millennials want to be mobile, so they are waiting to buy their homes a lot more so than previous generations because they want to be able to take that job in LA if it comes available, or just be able to pick up and move a lot more easily, because like I said before, the world is a lot smaller for them. So they very much value having the ability to pick up and leave. And then related to that, they are also delaying marriage and family. And so career is much more important to both women and men in this generation, and so they're delaying having kids. Bank distrust is a huge aspect that I think is not necessarily, I think it's a barrier to homeownership, but it's one of the major barriers that I think we have to overcome as an industry, is just being able to help in providing kind of trusted advisors. And that's an area where I was telling Bruce that I would really like to push lenders to incorporate more partnerships with housing counseling agencies and just be able to build up that trust a lot better with someone that can actually be not tied to the lender, that can be a trusted advisor through the process. And then technology and information that has not kept up with the demand, especially in this industry, and that is largely, I mean, a lot due to regulatory issues and kind of, you got to keep your priorities straight on all of this, but I definitely think that this has played a big role in not having the adequate education provided to millennials. I mean, even a lot of the tools that are out there are getting a lot better in terms of education, but and being able to understand disclosures and all of that, but we're still not moving into a digital age, and that's way far behind. Millennials are used to reading everything online and being able to have access to information that feeds it in our language. I always tell people, I mean, if you have a customer come in that speaks Spanish and doesn't speak English, you're going to provide them information in Spanish. And so for millennials, and really for the broad population, we speak digital, and so we need to have more information available to us that speaks in our language. And millennials are less trusting of marketing, less relative to you guys. But before I go into the rise to homeownership, does anyone have anything to add to those barriers that you've experienced?
And we can maybe give it a second for folks to comment on that. And if you do, please just use the question box and we can read your responses. Do you want to take a couple questions while we're letting people do that?
Yeah, that'd be great.
Okay. So someone asked if there are any figures on the digital divide, or the cost of internet access and using smartphones, et cetera.
The cost of using smartphones for the providers, or?
I think as far as the digital divide, I guess kind of income-based access to technology.
Oh, right.
I think.
Okay, yeah, so that's something that often gets confused, I think, because people assume that lower income are not going to be as tech savvy. But I was a social worker before this, working with very low income immigrant populations, and I was so surprised by how, I mean, even the clients that were from like rural Mexico and lived, I mean, truly in such deep poverty, I mean, their kids would come in with iPhones, and because you have access to that very easily at a very low cost. And so, and what I'm finding is that a lot of the lower income might not have a laptop or computer, but they will have a smartphone. And so they choose that over, because it has become a necessity to have access to the internet. And so a lot of them choose to have that. And that's why I think that while there is a digital divide when it comes to maybe desktop usage, there is mobile is really the key, and having mobile apps or anything like that. And that actually leads me to, I would love to go ahead and launch a poll maybe after a couple questions, or if you think now is a good time, but I would like to know if you guys use any kind of tools in working with millennials related to technology.
Great. The other question, I think, is what you're about to get into. It's basically how ready millennials are to settle down and buy a house. So maybe I think that's what you're going to address next. Is that right?
Yeah, that's perfect. So
okay.
I think that, yeah, I'll address that in just a second.
All right. So I will launch the poll. And just to your previous question about barriers, the one response that came in was savings as an additional barrier.
Savings. Okay, yeah, that's a really great point.
And I think you may not be able to see the poll again, but it's launched, so we'll just give it a...
Yeah, I don't know why I can't see that, but that's okay.
So the question is, how many of your clients use mobile technology, such as apps, blogs, websites, videos, to retrieve home ownership education? We'll give it just another 10 or 15 seconds.
Great.
All right, so we're sharing the results now. So pretty even split between the first four. 26% say fewer than 10%, 23% say 10 to 25, 21% say 25 to 50, 23% say 50 to 75, and then only 7% for the more than 75.
Okay, great. Well, that's really interesting. That's helpful. I think that that's really interesting that it would be evenly split like that. So great. Well, I'm going to go review kind of some of what that last question was talking about, which was when millennials are ready to settle down and get into homeownership. Something that we hear a lot is that millennials don't want to buy a home, and definitely in the media that's all over the place, that millennials are not interested in homeownership, and it's a disaster. But really, that's not the case. I mean, 90% of young renters said they still desired to own a home someday. I think that timing is definitely an issue. We entered the market during or right after the recession, and so there's some slow going there, but there's a lot of reasons to see why millennials are moving into homeownership and why that's going to happen probably in the near future. And that it's already happening now. But 87% of millennial homeowners said their home was a good investment, and that was 14% higher than what the previous generation said. So again, it ties very closely to that investment value. But millennials are seeing homeownership as a good investment. So we're not as going to bank distrust and all of that. There is a trust issue there, but I think that that's being overcome widely across the generation. And then 81% of millennials have less than $50,000 in student loan debt. So that is significant, and still $50,000 is quite a lot of money, especially from my perspective. I had more than that, and it can be very overwhelming and easy to miss payments, which interrupts credit as well. But according to Pew Research, less than $50,000 in student loan debt has a minimal to no impact on homeownership rates. So I am assuming from your perspective, being housing counselors, that you would say that it definitely does have an impact, but according to Pew Research, that it has very minimal impact. And then the job growth is huge. Millennials have, and something to keep in mind is millennials are, again, investors. So we've been investing in human capital, getting a lot more education than previous generations. But overall, we have seen a significant growth in the job market. We have been in internships and all of that weren't paying very much, but now we're getting those steady jobs and really rising in our career. So that's definitely going to impact homeownership as well as they become more stable. And then another thing to keep in mind is that homeownership does not necessitate marriage. When I bought my home, I was not married, and I found this study very interesting by Redfin that said 38% of millennials would postpone a wedding or honeymoon to put a down payment on a house. And I think that really reflects our overall values of really pursuing the investment and career ahead of family. So before I go into kind of overall outreach strategies and communication, I would like to launch the next poll, which is about how you are specifically communicating with your customers. Like if you utilize any of the technology or anything like that. I think that would be helpful to know.
All right, and the poll is open, and we'll just give folks a minute to weigh in. And this one, okay, you can choose as many as apply, right? All right.
Yes, yeah. Mm-hmm.
And just give it another 10 or 15 seconds. All right, and we are showing the results now. So 31% said they use text, 15% said video conference call, 19% use mobile apps, 83% use blogs, websites, and 33% use webinars or video broadcast education.
Great. That is great to hear. I'm glad that I know a lot of providers are not utilizing a lot of these tools, but that's impressive to me, so that's great. I definitely encourage you guys to utilize those tools, and I know, and before I go into any of this, when I talk about marketing, I mean outreach and overall communication of your message to your customer. But I think that it's important to realize that this is a skill. So just like when we were all learning how to use text message, and yes, I do remember actually doing that, but we were, it was a skill, and after a while you learn how to do it, and that's the same thing with communicating your message and utilizing different forms of technology. It takes some time, but I very much encourage you to continue pursuing that, because that, I believe, is the best way to communicate to this generation. So out with the old, in with the new, there's a fantastic article written in the Harvard Business Review called "Marketing is Dead and Loyalty Killed It." But it's really all about building trust with this generation. And so we don't respond well to a lot of campaigns that were traditionally used to reach out to their customers and communicate with them, but we very much value trust and relationship with any of our providers. So be authentic and informative in communicating your message. Definitely be yourself, even if you don't know how to use any of this technology. Acknowledge that, and just but let them know that you are there to build that relationship and provide them with quality information. And that's what millennials care about above all else. So in discussing how you communicate your message, these are the key things that I think have been most effective in reaching millennials. And that's one, like I've been saying, building that trust and relationship, and then also providing convenience in terms of communication. So I love that 15% of you, I think, was it, that used video calls. I think that's really helpful. And I know that in the industry, in the counseling industry, being in person is really important. It can definitely help a lot with picking up on facial expressions and all of that, and in terms of providing a quality service. So I really encourage you guys to utilize that, whether it's FaceTime or there's different apps like Google Hangouts that allow you to do that. But it provides some convenience to the customer while also allowing you to develop that relationship and pick up on things that otherwise wouldn't be picked up on just over a telephone conversation. And then expert information, because, and of course that's mainly your job, so that's easy for you, but I definitely think we are information just hungry. I mean, we are consuming so much information, and a lot of it is not being provided in a way that we can digest easily. So I think that's a lot of what your role will be in communicating your message, and has been with millennials. So the first most important thing in communicating is being transparent. So we want to know that we really understand everything going on in the process, and a lot of people didn't used to be like that. And this is reflective across generations now, but it's definitely come about more so with technology. But just being able to feel like we're part of the process and that we understand what's going on is really important, even if it's not good. I mean, I always encourage companies that are nervous about disclosing certain things about them, like there's some diversity regulations coming out in the Dodd-Frank that I do a lot of work with, and a lot of companies are really hesitant to publish their workforce data because they know that they don't have a lot of diversity. But it's not as important as being honest and open with millennials. We care that you acknowledge that this is an issue, and then it allows us to feel like we can trust you. I mean, we don't care if there's a problem, we care if you're hiding something. So that's one of the core values. And then secondly is empowering with information. So being consistent and convenient with that expertise, really utilizing a lot of those technology tools is really helpful. There's a lot of innovation that can be done in this area, but I think that if you are able to weed out some of those apps that are not very helpful and provide them with some of the recommendations for apps to either communicate with you or the blogs or whatever that can provide them with better ongoing education, then that can be really helpful, because we are very much an empowered generation. I mean, we care about products that will empower us to be able to make good decisions, and but we want to feel very much in control of the process. So anything that you can do to make that a little bit more possible for us is really helpful by just helping us to understand the process and feel like we are a part of it through information. And then from the convenience standpoint, like I said before, making it so that this is a feasible thing for us to keep returning to. And I think a lot of times if it's only in person, that can be very difficult. Third is to build the relationship. And I really encourage people to not be afraid of social media or, and I know a lot of companies have their own compliance standards when it comes to that kind of thing, but really that's where we're communicating. So any ways that you can build a relationship is very helpful in building trust and ongoing just remembering that this is a part of our lives. And I think that with a lot of providers that I present to, I encourage them to even set up a page. If you're not able to friend them specifically on social media, then set up a page where they can like that page and you can publish information that goes out. It's like a company page. And that way you can provide them with education and expertise on an ongoing basis through that social media platform. I think Facebook is a great place to start. A lot of younger millennials are not using Facebook as much, but overall it's a great first place to start and can provide consistent relationship and communication through that platform. And celebrate with us. So we really love to I mean, going through the homeownership process is definitely, this is me sitting at the closing table, by the way, and it is easily one of the top 5 most memorable moments of my life. And I wanted everyone that was involved with me in that process to be sitting there with me. So I think if there's any way that you can really establish that and just kind of be part of that celebration process, especially for first-time home buyers, even though, like I said, for me, homeownership was a little bit more of an emotional attachment, but for most people, I think it creates a lasting impression that allows us to forever remember that you are kind of a go-to person for your expertise. Oh, and then keep in mind, related to social media, glad I put this slide in there, that we do look up providers that we do business with or have any kind of business with, just to see what kind of person you are. So it's important from your perspective, just your own personal social media accounts, to know that if you have it public, then whatever information you're putting out there, your customers are probably going to see it, especially your millennial customers, because we'll look someone up initially to see, again, what kind of person you are. And so that's just important from a branding perspective. I see a lot of people lose trust and rapport with customers because they are publishing things that might be inappropriate on social media. There's a lot of settings you can include too, so that certain posts, when they're and personal stuff is fine, but when you're like ranting against a particular political agenda, then it can sometimes be offensive, and you might consider putting it up as in a certain setting so that only friends see that and not everyone in your, not publicly, everyone sees that. I had this listed. Okay, there we go. So 4th is to communicate efficiently and consistently. And that means utilizing some of these tools, but also being in consistent communication. And that would include providing, I mean, we're used to being able to look online and see an update on whatever it is that we're doing. I mean, when we order pizza, we see the little spin table go through, and we know, okay, it's 75% done. And with anything related to homeownership and the whole process, it's very difficult to feel like you're making progress or understand where you are in that process. So any kind of consistent communication is helpful, or providing updates, or having the ability to just even access you very quickly and easily. And related to that is, if possible, provide quick responses. You don't have to text all of your information, and most of that kind of stuff can't even be texted, but you can say, hey, can I call you in 10 minutes? Or that can be helpful, because a lot of times I hear that millennials don't pick up their phone, and certainly before I started my business, I really didn't pick up the phone. I still don't listen to voicemails very much, but we are much more likely to pick up the phone if someone, or we will, if you text and say, hey, can we schedule a call in an hour? That can be just a very helpful way. And then if we text you a question, you can say, yeah, I'll need to answer that over the phone, and then schedule that. And that can be a quick response that allows them to feel like we're making progress. Okay. So utilize things like Instant Messenger and FaceTime, all those things I mentioned before, but that can also help in convenient and efficient information. Because even like we said before, over the phone, sometimes housing counseling can be very difficult. And so if you have the ability to Skype or use some kind of video conference, then you're able to pick up a lot of the information that you need, but also make it very convenient for the customer as well. Okay, this is related to, I was hoping to make some changes before getting in here, but I would love to, and I think you received some of the handouts that I created specifically for this call, but I have additional information and research that I'd be happy to send you if you'd like to reach out to me. And I do have a request. I would like to open it up for any questions if we have time for that. But I do mostly presentations with lenders, so I rarely get the opportunity to be in front of the counselors. And I got into the business from a consumer advocate perspective. I watched I have a godmother who is from Mexico, and I was very, very close to her. I watched her purchase her home, and it was very much like a piece of the American dream, and it was a beautiful, amazing thing. Then I watched her lose her home a couple years later due to poor communication skills and just not communicating effectively. She speaks Spanish as a first language, and so all of those things were very impactful for me, and I wanted to make a difference in helping the industry to better communicate with customers. So that being said, from your perspective, I would really like to know what you feel like is missing from the lending process and how I can better push those initiatives out with my customers. So if you have any, I'm going to put out a poll about this, but if you have any additional thoughts, I would love for you to reach out to me. That's an area that I would love to have your input from a consumer advocate perspective. So Matthew, do you mind launching that poll?
Yep, so it just opened.
Great.
All right, people are starting to weigh in, so we'll just give it another minute.
Great, thank you. And this one you can check all that apply as well.
People are taking their time and thinking about this one, so we'll give it another.
Yeah, this one takes a little bit of time.
All right, I'm going to close it and launch share the results now. So we had 10% said language access, 23% said limitations in credit assessment, only 3% said limitations in income documentation, 25% said lack of education provided by lenders, and 40% said the complex lending process. So that was the biggest one, followed by lack of education provided by lenders and limitations in credit assessment.
Great. Well, that is really helpful for me, definitely what I expected. But so if you have any thoughts regarding what you would like to see in terms of improving that process, I would love to hear those. So, and also if you have any questions related to millennial or cross-cultural communication, I'm happy to help. I do free calls on Friday mornings for any providers to talk about cross-cultural communication issues, so I'm happy to schedule that as well. But do we have any questions related to anything that we talked about?
We do, and I'll run through some. We have some questions and some comments. You did anticipate a lot of the questions, so let's see. Okay, so with reporting income and the rise of entrepreneurship, do you have any data on whether there will be an increase in self-employed reporting income over previous generations?
I don't have the data off the top of my head. I know I've seen research related to that, so I can look that up and provide that to whoever asked that question. But I would definitely suspect that there would be a large increase in reporting outside income, because, like I said before, this generation is very, I mean, we will Google how to do something. I Googled how to do web design and started making websites on the side. And I think adaptability is a very positive trait associated with millennials, but we definitely are, especially because of the recession and everything, we kind of had to do whatever we could to get by. And so I think that will be a part of our ongoing income in the future. I don't think it's going to stop when everyone starts getting more full-time jobs. And I think we've seen that as well as millennials are getting more established in their career. We're still seeing alternative sources of income coming through.
And I think, and we've always historically had a difficult area there of documenting incomes that have been non-traditional and trying to get the industry, the lending industry, to accept that. But it's a strength that housing counselors can bring to this conversation, and trying to figure out who's got predictable income from it and longer-term incomes and things like that, so that this kind of packaging people as we would do somebody who's self-employed, that's very that'll be pretty important for our work.
Yeah, absolutely. That's really great input.
Great. So you actually talked a little bit more about this after the question came in, but I'll just read it and see if you want to add anything. The question is how people are using text. Is it things like client follow-up, and then there's just some kind of nuts and bolts questions. But
yes, I'm glad that you brought that up, because text is really the #1 form of communication with millennials. You can send emails and whatever and leave voicemails, and they will never look at them or listen to them, but a text message they will open. So I think the open rate is like 98%, and I would assume that even those that aren't open, they still read them. So I think that any way that you can follow up over text, and like I said before, even if it's just to say, hey, just want to make sure you got this document, or hey, just want to schedule a call with you, what's a great time, and using text as your first form of communication and then following up with whatever else is really, I think, the most effective way, and has been the most effective way to communicate with millennials.
So great. One of the innovations that a number of groups, especially NeighborWorks, have been working on is this financial coaching model, and part of it is giving people nudges to make sure they make their payments and do various steps that they need to do, and doing a text is one of the platforms for doing it. For some people, it's actually emails, but or phone call. But to me, the idea is that there be an ongoing relationship after you've had your counseling sessions to help people make progress through the system. And I think texting is a big part of that.
Yeah, that's great.
I'm sorry. Go ahead.
Oh, just additionally, you can send articles over text, anything that, if you find a website or app that's particularly helpful, you can send that out, and it's so easy to communicate that way. So I think that if you don't utilize that, that's really a great tool.
And there were some follow-up questions, I think, not necessarily for you, Kristen, but just kind of the person was looking for input on how people actually go about using text message, if folks are just using their own personal cell phones, or what it looks like. So maybe that's a conversation we can have later on, Bruce.
Oh, good. Yeah. Interesting.
All right. The next question, someone asked if you could say more about the building a relationship and what that looks like when the communication takes place via technology. So not the one-on-one.
Yes, yeah. This is a really common question I get. I want to go back to that last comment really quick, just because I was thinking about this. I've helped companies get where providers will use Google Voice instead of their own personal text message. So they still use their phone, and that means that the company they're with might pay for their phone or whatever it is. But I've heard of problems where millennials will text at 9 p.m. at night or something like that, and it disturbs them. So one way to get around that is to utilize an app called Google Voice that allows you can text and call from that number. They can call that number, but you can set boundaries there, so you can schedule it so that you don't receive any calls after 7 p.m. or whatever that is, and that way you keep your business hours. So I just want to make that comment. But definitely building relationship over technology is, again, one of those skills. But a lot of people think that relationship it's the way that we've done it before, which is in person, and I think that people misunderstand a lot of times the millennial population. When I say we're very social and connected, people say, well, that's not a relationship to me. I mean, if I'm Facebooking someone, that's not a real relationship. But that's just the way that relationship was in previous years. And for us, we do feel very close, even to brands that we work with. I mean, it doesn't even have to be necessarily an individual, but building relationship means building trust and having communication. So trust and communication can happen over many different platforms, and one of those can be, like I said before, social media, text, all of that. While you might not feel like it is as close of a relationship, I think it's important to remember the cultural differences there, because for us, we do feel like a lot closer to someone if we're in consistent communication, even if that is always over text message. So I think that's very different. I'm on the older side of the millennial population. I think that for me, and I think even for younger millennials as well, having some mix there is really helpful, particularly when you're talking about something so important like financial counseling and housing counseling, but utilizing some other areas like the video conference call in addition to text and social media and other technology platforms can be really helpful in building relationship from a comprehensive perspective. So kind of getting outside of the box of we only build relationships in person is really important here.
Great. I'll just read a couple of quick comments. One person, Kelly Battaglia, said that they found one-on-one counseling works really well with millennials because it helps build a relationship and trust, and as a nonprofit, it connects with their philanthropic nature. And then we had Phyllis Caldwell had an interesting comment. So they had a group of MBA students from Wake Forest come in and assist them in developing a marketing plan for their online homebuyer education course. And so they helped them to develop a set of tools and recommendations to assist them in reaching millennials. They helped develop social media platforms and added a social media intern from the university to help them grow. So it seems like it's been a really successful program that other folks may want to think about trying to replicate.
Yeah, that's really great to hear. And if any of you guys have examples like that, I love to hear those, what's been effective for you or what's been problematic for you. But definitely, I mean, utilizing MBA students is a great idea. Like I said before, we really, as a younger generation, we value internships even if they're not paying much or whatever. We're less likely to jump straight into a long-term career. So that's an opportunity for many of you to utilize fresh, like innovative minds and fresh out of college with that more recent education on marketing can be very helpful. And then I'm glad to hear that you are using marketing strategies. I hesitated to leave in some of the information related to marketing because I wasn't sure if that would be useful to you guys. But I definitely think that when you're launching any kind of strategy, outreach strategy to promote some kind of education, and I would say that that's what needs to be done across many different platforms, then it's important to have a very specific strategy to reach millennials, because it's going to be a different strategy to reach older generations than it is with millennials. So I think having a specific one in place, like it sounds like he did, would be very helpful.
Great. Someone else asked, so you had mentioned a few of your tools that you really like. You had said the Google Hangouts. You just mentioned Google Voice. Could you just share any other of your favorite tools to engage clients?
Yes, let me think about that. I mean, FaceTime is great. Trying to think. There is a new one that I used recently that was a really great video conference. I think it's called Voodoo. but I can't remember exactly. And let me think. There is another tool by Mortgage Coach that it's called MyNest, MYNEST, and that was really awesome for home buyers. It might not necessarily be as useful for you guys, but it's been really great with millennials to help them just kind of sort the information and be able to make decisions in terms of their home purchase. But platforms like that help to organize information from a mobile app standpoint are really helpful, and I'll think about that and send that over to you guys if I think of anything else.
Great. There's more just a comment that affordability is a huge issue, and the person pointed to things like student loans, credit debt, and housing costs. Asked how we can overcome this, especially in urban areas. That might be more for Bruce or someone else, or maybe we can just leave that for now. But affordability being a huge issue is the gist of the comment.
The one thing that I would add to that is that I think that we should be using urban design principles in suburban communities. And I know that might not be something that all of us can address, but because there's an obvious demand for the urban city center, I think that we need to start kind of planning our cities in that way.
It's interesting that the row housing in neighborhoods in Philadelphia, Baltimore, D.C. have become very attractive to millennials, and so properties that were sold for a very small price a few years ago have now really jumped in value. I mean, but it does fit into the definition of convenience of being not a lot of space, but also in some ways environmentally smart and things like that. It's even though it's 150 years old, it's still a good housing model.
And I think the last question. Well, first, if you could just repeat your website.
Yeah, my website is www.culturaloutreach.net.
Great. And then the last question is if you could just talk a little bit more about, you had said something about speaking in millennials' language. If you could just talk a little bit more about what you mean by that.
Speaking in millennials' language, I mean utilizing the technology that's available and communicating through like the ways that I've talked about by initially over text and promoting your educational initiatives through online platforms, blogs. I mean, really having as much of a digital experience as possible because, like I said before, millennials speak digital, and that is our native language. So we need to start moving as an industry towards being able to communicate over digital platforms. I would love to see more innovation when it comes to education because I think it really is a black hole when you go online and start looking for homeownership education. A lot of it is outdated and a lot of it is just scattered and all over the place, and that is confusing. I mean, for us, typically you can search about something and find everything you need to know about it. But when it comes to homeownership, there is no, really what I've been able to find, there's no central location that at least has good enough SEO to come, or when you search on Google for it to come up right away. And it's very outdated. So I would love to see more innovation when it comes to that, because that is the language that we speak.
Great. So one other comment, someone had recommended Mint as another app that they find is popular, and there have been many comments thanking you and letting you know how helpful the information was.
Oh, good. Thank you so much for having me. Again, it's such an honor to be in front of you guys, and if there's any way that I can support you in the future, please let me know.
Well, we really appreciate this. This has been terrific, and we'll definitely stay in touch. We appreciate the fact that you're a supporter of the counseling. Love that millennials are concerned about social justice along with all the other good things. I think we've all learned a lot from this, and let's stay in touch. This is very helpful.
Great. Thank you very much.
Cool. Great. So don't everybody go anywhere. We've got a few more things we have to touch on, which are basic to our business. We'll do this as rapid fire as we can, but we've got a lot that we need to cover. So in terms of emerging issues, So the Federal Housing Counseling Advisory Committee, hopefully you all have heard, under Dodd-Frank, the Office of Housing Counseling had to develop an advisory committee that's finally rolling out. We have, this is something I've been involved with for several years because we're deeply involved in the writing of this in Dodd-Frank. And they have several categories. We're not quite sure how it fits in, about how many for each category. I'm not sure there's some confusion about it, the way it's worded. But the categories that they're looking for are lenders, real estate professionals, consumers, housing counselors, but they're very interested in several things, one of which is hearing from different voices. So, for example, I'm not going to apply. We're interested in trying to get people who don't have as much access to be included in the process. We have a lot of nominees from California, New York, and the East Coast, but we really need nominees from South, Midwest, and Southwest. I'm very concerned about who gets nominated as a lender and as a real estate professional, the goal here is to identify people who have a deep commitment to growing housing counseling. So I think there's lots of real estate agents that work with us that love us, but really what they're interested in is the commission, and they think we're a way of doing that, and that's great. We'll always work with those folks, but that shouldn't be who represents us in the at the table in the advisory committee. We should really find the true believers that are convinced that this is that we're sort of the best vehicle, and the job is to figure out how to make it all grow. So lenders, real estate professionals particularly interested in, consumers could be consumer advocates, but also regular consumers. We do need some people who are renters. A lot of people who are coming in are homeowners already. Not a big surprise, but they want diversity, and so that's an important issue there. The people who apply will need to self-apply. You have to fill out an application yourself to nominate yourself. But we are going to have some kind of list of names that we think are good ones we want to recommend, and NHRC will just send in a letter with some of our recommendations. And certainly it's great for, if you've got recommendations, to get other groups to send in letters of support as well. So do some thinking on that. Send me anything you've got, any people you've got you think would be really, really excellent, and pretty good is not good enough. We only have 12 slots on the whole committee. So let's see what we can come up with. And do that by email, because I'll try to circulate that to a few of the people. We're sort of a loose committee that's working on this. Nominations have to be in by the 14th. We're hoping to kind of finalize a list on Monday. Short timeline. So item number 2, FHFA update. So as you all know, we've been really working hard with FHFA to integrate housing counseling into the process. And for the past 2 years, I thought we had really developed a system where there'd be housing counseling data fields included in the mortgage application, the uniform application. And we learned at the last meeting that they were trying to rethink this a little bit and figure out what the best vehicle was. So we had a call beginning of this week where we learned that the idea was to capture those data fields at the point of mortgage, when the mortgage is actually booked. So after application, everything's closed and there's a final decision been made. And this was, I think, just an unbelievably difficult and strange solution, because it means then that each lender has to somehow collect the information and make sure it gets to the closing and the booking of the loan. And mortgage application, our counselors can give the information to the client. It goes into the application. It's integrated in here. So that was a pretty astonishing comeback. We think that what happened was that, well, we know what happened was that FHFA went to Fannie and Freddie. Fannie said that they would talk to their lenders, and some of their lenders came back and said, well, we won't know who got counseling until the loan booked. And well, as some of you may know, Fannie and Freddie have had a commitment to having mortgage insurers provide some of the counseling, And for them, they don't get involved really until mortgage application is made. So it's probably lenders who are very tied into that model that define that. Obviously, our interest is that counseling get done before sales agreement, before loan application. So we're going to continue pushing on this issue and try to get it back into the mortgage application. It gets incredibly weird when you think about it in terms of preferred language. Preferred language would also only be put into the system at the point the loan is booked. Well, you really have to ask the borrower what their preferred language is, and the one place to do that is when you're face-to-face with the borrower at mortgage application. So why that wouldn't be included just doesn't make sense to us. We very vigorously protested both problems. Hopefully we made some progress on that. They said they'd agree to take it back. We'll keep you informed on it, but it's a key issue here in terms of our ability to deliver in the field. HCO. So many of you made comments about HCO. Politely, I'll say, I thought you were very gracious. I know some people are very angry, and appreciate that these were carefully worded and appropriately worded. We turned all that in a month ago, and on the call, they acknowledged receiving this, and they want to know if there had been progress. I said no, and so we're going to do a follow-up call in a couple weeks. There's a team of people who have already submitted information on HCO. We will try to bring you into that conversation. If there's others who want to be part of it, please just email me. We'll create up a loop and try to tie people in as quickly as we can. The overall message is that HCO is more in a maintenance mode rather than an expansion mode. So when they asked what we would like to see in HCO and started talking about bringing it into the 21st century in terms of technology, they said that FHFA does not believe that Fannie is going to commit the resources to do that. So there may be a longer conversation about what to do about HCO, what can be done about HCO, but most immediately let's try to solve the problems with the help desk. Let's try to solve some of the problems where you enter data and it doesn't populate the fields properly, and let's try to solve some of the training gaps that are there. So moving on, so here's an interesting issue. As you probably remember, if you have a case that you built to NFMC and it turns out that you spend way more than the $450 that you can bill to NFMC, in the past, it's a complicated case, you could also then bill the excess time to HUD. The Congress explicitly put in a provision into the budget 2 years ago that said that you couldn't do both. You couldn't do both. You could only do one. And then last year, it wasn't in the budget. It wasn't in the congressionally mandated budget, but HUD had said they would put it into the NOFA. So next year coming around, the question is, can we rethink this? And we're in a different place in the environment, and we should think about whether we want to send a letter to HUD. And I'm interested in a few people who might be interested in help write the letter, saying that we're expressing interest in re-examining this, and we're in a different environment now where cases are more complicated, take longer, and it's appropriate that in those cases where it takes a lot to get a case solved, that potentially NFMC and HUD funds might be devoted to it. So, please weigh in either in the chat box or shoot me an email. And especially if you're interested, shoot me an email, and we'll try to pursue this. Need to move on this pretty quickly if we want to get it into the hopper. Personnel activity reports. Well, so I don't know if any of you were on the Omni Circular discussion on Tuesday that HUD did, but the requirement for the specific form called Personnel Activity Report has been eliminated. It doesn't mean that the kinds of information that you have to provide isn't required still, and you could see it in the slide there. But the PAR itself, which, as you know, the HUD Task Force and many of you have kind of bitterly communicated that was a difficult form to use and very administratively burdensome. So I think we have to figure out what the implications of this are, but the bullet points there are what you are required to do, and you're not required to do a PAR per se. You just have to document this information. Moving on quickly on to bank settlements and funding. There is a conversation going on about, we have always tried to figure out, is there a vehicle that could be used to distribute settlement funds that wouldn't rely on the lenders to do it, but would be a different way to get the funds out into the field. And there's been a lot of talk about HUD being the vehicle. There's some complications with doing that. It's not a closed door, but nobody's inside the administration is really arguing for it. You know, it's a complicated process. It would have to require a new NOFA to be issued in each case. But interestingly enough, in the Bank of America and Citibank, there's provisions for $10 to $20 million at least to be spent for housing counseling, and there's some provisions for legal services. The legal services community is looking at, well, let me step back for a second. In New York, there is the AG specifically said that the funds for housing counseling and legal services will be distributed through a mechanism that he designed rather than through the bank deciding. And that mechanism became the Empire Justice Center and the Center for New York City Neighborhoods, and they released a request for applications this week specifically for New York. But the question is that a model that we could adopt for the rest of the country? And then then that triggers the question, who would be the vehicle for that? And we haven't had a great solution for that, but some of the people in the legal services community have suggested that maybe we should adopt what they're doing. So their proposal will be well, there's a couple. One would be that they would do it through the IOLTA funds, which are those funds that lawyers set aside. So that's not available to us. But the other one is there's an Institute for Foreclosure Legal Assistance, which was formed by the National Consumer Law Center, by the National Association of Consumer Advocates. So these are both legal services support groups, and the Center for Responsible Lending. And that institution, they got $10 million from basically this guy who, one of the hedge fund people who shorted the predatory lending field, and won big and gave $10 million to help people with foreclosures. And that money got distributed through this institute. And potentially we could think about doing something similar, asking the monitors and the AGs and the bank essentially to can we set up a mechanism for doing this, the funding that would distribute it through some RFA process. Complicated about who decides and all that sort of thing, but they managed to do it for the legal services world, and the idea would be that it might get the money out in a more broad way, and it may be in some ways a more useful way to groups. So something to think about. There'll be a conversation about this. If people are interested in being part of it, please let me know. So a bunch of ideas floating out there. Just want to also highlight to you, the CFPB put out a report recently on what they call credit invisibles. So these are people that some people you probably see who come in who don't have a credit report, who don't have a credit score, or their credit listings are so small that it's not scorable. There's a real, CFPB did a very good report on this, circulated links to it and a summary this morning. It's important to think about it for a couple reasons, one of which is that often this is the very poor, but it also represents some slice of the working class as well. And it's people who in some ways don't have very good advocacy in this world, and it really looks like the approach that the credit scoring companies are doing is that they want to capture more market share, and so they willy-nilly want to capture every shred of what might be scoreable data. But in fact, the people at the National Consumer Law Center, especially Chi-Chi Wu, really made a very good point, which is that sometimes very low-income people, for example, so a lot of this is rent and some of it's utilities, but an example in the utilities field is that in a really cold winter, sometimes people don't pay their utility bill until the light funds come in, and there's moratoriums to stop them from being cut off, and they manage their expenses that way. But they manage to catch up, and by the summer they are back on their feet again. They're really budgeting their funds in a formal way. And that kind of data is not necessarily, the argument's always been, oh, it's good, any piece of information is good. Well, not necessarily so. We need to sort of think through what makes the most sense, and we've worked with groups to try to have a more progressive view of how to expand the credit base here. So we've covered a lot of ground today, and really appreciate the fact that people really stuck with us, and you did in a big way. That's just great. We will be back again in 2 weeks. Please think seriously about joining the National Housing Resource Center if you haven't already. Membership dues are based on the size of the housing counseling budget. If you're a member, you get discounts, you get access to lots of information. We send out regular emails on funding opportunities. We have the compliance, a series of compliance webinars for helping people improve on their HUD compliance, which have been terrific. I think we have one more to go still. So we'll do a lot of that kind of work, and certainly if you're new to all of this, be sure to get on the Leaders in Housing Counseling call list so that you're getting regular notices about all the activities and the sign-ons and things like that. But thanks to all the good work you're doing out there, and we will stay in touch and talk to you in 2 weeks, if not before. Great. Bye.